Hello there, what's up, everybody? Hopefully, everybody is doing okay. Everybody is cool, healthy, and yeah, learning and improving all day, every day. So, it's on a Wednesday. As usual, I've not been around for, I think, on Monday because we had some bank holidays. I didn't trade. Yesterday, I didn't take a trade also on Tuesday. So over here on Wednesday, I'm back again. Let's look into these charts and see what did I see and why did I take this trade. So today I'm in Euro USD. I will, as I said from before, I will be trading the USD pairs, mostly the gold USD and also the Euro USD. These are the pairs that you'll be seeing me mostly dealing with. So over here, this Euro USD, I took a buy today, and I'll explain why I did take that buy. I guess in less than 20 minutes I'll be telling why I had my bullish bias. So without any further ado, let's get cracking. So over here, you can see I have these weekly fair value gap. So let me start with the weekly fair value gap first of all. So from let me start with the monthly fair value gap. So what I saw is, you can see from this low to the high over here, we have this price leg over here. So using premium discount tool, this tool over here, I did distinguish that price had already retraced to discount because we had this fair value gap inside discount. So let me do it using this tool over here. So you can see we have equilibrium over here because this is the high and this is the low. We have this fair value gap being inside discount. And if you want to be buying, why should I want to be buying? Because over here we can see we had a market structure shift, right? That was to confirm to us that we want to see bearish prices. But over here we had this fair value gap created, this monthly fair value gap, inversion fair value gap, whereby this candle closed above it. So the closure above this fair value gap to me signifies or shows me that I'm no longer expecting bearish prices because of this market structure shift, and also because of the liquidity sweep above this level. But since this fair value gap that was to resist prices from going higher, but has now supported price going higher, meaning to me, I want to see bullish prices. And also I had this order block here. These we have from this price leg to this price leg high, this price leg low. I can see these are bearish move, so any bullish candles to me were an order block. So from the close of this candle to the open of this candle, to me these all are or is an order block. And so what I noticed is, you can see this candle closed above the order block. So to me this was signifying or showing me that somehow I'm anticipating higher prices. So we saw this previous month a dropped lower, closed bearish. This current month you can see currently dipped into discount, and you can see from the lower time frame, probably the weekly. So what I'll do, let me take everything back to the state. Yeah, this was the initial state. So you can see over here this monthly fair value gap. Let's drop to the weekly time frame so that we can see what really happened. So what happened is, inside this monthly fair value gap we have this weekly order block over here. So we can see the market reaction. It dipped into this monthly fair value gap. I guess to those who are not seeing, let me make things more clearer. So over there, so we have this weekly order block. We have this weekly order block, this down close candle. The market reacted, tapped into it. You can see the reaction of these. And something else I noticed, because we are in discount, Remember, this monthly fair value gap from the monthly time frame is inside discount. Also, below this low, we are having liquidities. So we're seeing liquidities being engaged below these lows. We're seeing liquidity being engaged by these candles wick. We have these candles wick that engaged these liquidities below these lows inside this key level, especially this monthly fair value gap inside discount. So with all these confirmations, or with all these confluences, and also having nothing that might drive the market lower other than the liquidities, but going lower, I want to see if we have a clear market structure that to me is bullish. So after even confirming all these, I want to go to the lower time frame and also confirm whether I can have a clear market structure, right? So from the weekly, what else? Something I noticed is we have this volume imbalance whereby we have no body between these gap. Only wicks are overlapping, we have no body. So to me, these are volume imbalance that also usually drives or acts as a value gap. It acts as an internal liquidity, internal range liquidity. So this will be my first draw on liquidity that is still inside the discount, because I want to see market retrace to these premium levels and maybe go higher to targeting these highs and also these highs, right? So I would like to see market retrace to premium first, then from which later on we can look for other other things to be targeting, or we can look on the price action inside premium and see, are we expecting to see a retracement lower, or we continue with an up movement. So with that, we had also this weekly fair value gap over here. I guess you can see from this candles low to these candles high, we have a weekly fair value gap there that is in blue, was also a key level that I have been watching for today. And then I dropped to the daily time frame to see whether I can confirm whether I have a clear market structure shift. So usually what I'm expecting to see inside or what I usually expect to see an example of a clear market structure shift, a market structure, for instance, from bearish to bullish, is an example like this, whereby we had a swing low being created, then the market rallied and created the high, then we had these liquidities created before this swing low, the market rallies lower, right? So when it rallies lower, you can see the liquidities that were below this swing low have been engaged, right? Then the market retraces. Maybe as the market was retracing lower, we have fair value gap created inside this price leg, right? So let's assume we have a fair value gap from this over here. Let's assume this is the low. Maybe we have a fair value gaps high around that zone. So we see a candle closing above that fair value gap, right? So to me, if we had a key level inside this zone, right? Maybe we had a key level inside this zone around here where the market had dipped into. The market then closes maybe above this fair value gap that we could be having here, like this. Then the market maybe retraces to that fair value gap, then rallies higher and creates a market structure shift. And we're talking about a market structure shift is we see a candle closing above the previous swing high, right? For instance, this is the most previous swing high after we have a liquidity sweep, after we have also had another bearish array that was a fair value gap that was to support price lower, now has been violated and now is supporting prices higher. And if a candle closes above this swing high, then to me, I'm expecting, this is what I call a market structure shift. Then I'll be expecting maybe market to retrace down to a breaker or a fair value gap or an order block. Then I see this kind of movement, higher fair value gap, order block, and higher and higher. So in this, what I usually like to see. So we've talked about a liquidity sweep over here. Maybe we had a fair value gap over here whereby we had a candle closure above, then a reaction of this fair value gap or another fair value gap that was created on this price leg higher, then see this kind of movement. So back into our charts. So this is what I wanted to see. Furthermore, as I was telling you over here, we want to see price inside a key level. So over here we have this monthly fair value gap. So this is our key level number one. Then we have this swing low that had equal lows. We had this swing high. A swing high has been formed. Then we want to see this retracement lower. So you can see this retracement lower into this monthly fair value gap. Then we had this fair value gap that was created from this candle's low to this candle's high. We have this fair value gap that was to resist higher prices, but resist prices from going higher, but support prices going lower. But it has been violated by a candle closing above this fair value gap. You can see this is the high of this fair value gap, but this candle closed above it. Then we had this candle tap into this fair value gap, now acting as support. Then you can see this retracement, right? So to me, this was signaling to me that I want to see higher prices. And something I noticed is this candle's close was above this swing high, right? So to me, this was a clear market structure shift. And also we were in a weekly fair value gap, this fair value gap. So let me make it like that. Yeah, we are in a key level. You can see, I'll delete this. You can see this weekly fair value gap. We had this candle close above the weekly fair value gap midpoint. So when I see situations like this, seeing a market structure shift, seeing liquidity sweep, seeing a reaction of a key level, seeing a bearish raise being disrespected, so to me, I was now bullish, and what I was to be targeting is I want to target this weekly fair value gap, a volume imbalance, I mean. So after confirming that from the daily time frame, so what else, something else I was watching is we had these these candles high, which I wanted to see. Mostly I wanted to see an immediate rebalance, but you can see for now we don't have that immediate rebalance because we have a small inefficiency there, so but I'll be talking about the trade that I took. And when I came to the lower time frames, what I did see is we had this movement. I was watching what had happened here. What I saw is we had this low that cleared this liquidity below this low. Then we had this swing high that created a market structure shift whereby a candle closed above this high, creating a fair value gap. And upon using my tool from premium discount, I noticed that we had this fair value gap inside discount. So from that high to this low, you can see we had this fair value gap inside discount. Then after seeing that, the market had tapped into it, and you can see how it was reacting inside this weekly fair value gap. So to me, I didn't really further want to see market retrace lower because this candle had closed above these 4-hour not 4-hour, this weekly fair value gap midpoint, right? So this candle had closed below the midpoint, then again this candle closed above the midpoint. So upon seeing these, and from going lower into this price action around this zone, we'll see why I was supporting higher prices. I'll be talking to you why I was supporting higher prices. So inside the 3-hour time frame, I didn't see much. I dropped. We had a 3-hour fair value gap that I have been watching. So what I saw inside the 3-hour fair value time frame is we have this swing low that is here. So number one thing, I saw this movement lower, so cleared liquidity over here, tapped into a key level, also inside this a key level, whereby I'd seen this 3-hour fair value gap from this candle's low this candle's high. So this is the weekly fair value gaps, not weekly, 3 hour fair value gap low, and this is the 3 hour fair value gap high. So upon seeing that, I dropped to the 1 hour to confirm whether I'm seeing a clear market structure shift, and trying to observe the price action that would support my bullish decisions, right? So upon inside the 1 hour time frame, what I saw, we had this liquidity that was resting below here. The market rallied higher. Usually the first move is usually a fake move. Market retraced, and see how these candles were respecting the weekly fair value gap by closing inside. We have no candle that is closing outside this weekly fair value gap. Then you can see we had this tap into this 4 hour fair value gap over here. Then we had this retracement. I saw this candle at around 8. This candle closed above that fair value gap, so I was waiting for a retracement back inside these 3 hour fair value gap, from which I would take an execution. So I dropped lower. And also one thing I noticed was a clear market structure from the 1 hour time frame. So we've seen liquidity has been grabbed, right? We have these fair value gap here that had been violated. You see the same example that I talked about. And also we have a market structure shift, whereby we have this swing high, candle number 1, candle number 3, candle number I'm tired. Candle number 1, candle number 2, candle number 3, we have this swing high, whereby a candle closed above this swing high, confirming to me we have a clear market structure shift. And if you can remember what I talked about, a good or a clean market structure for me for bullishness is, I want to see a swing high being created, a market rally is down, takes the swing low. An example is here. You have this rally high that creates a swing high. Also liquidity below this low. We have this movement lower that cleared this liquidity. Now over here, inside this price leg, we have maybe a fair value gap or an order block that is being created, which is violated over here. Let's assume we have these fair value gaps high and a fair value gap low over here. We have, as it's inside here, we have this fair value gap that was violated by this candle closing above it. So the same that closed above it over there. Then the market maybe retraced lower into a fair value gap that was created inside this price leg, tapped into it. Then we can expect bullish momentum like this, right? So this is what I want to see in case of market structure, and that's what happened. We have sweep of liquidity, we have a swing low being created, we have bearish arrays being created and being violated, which are used as support to support prices higher. And to me, that's what I saw, and I decided to retrace to a lower time frame. And inside this 3 hour time frame, I decided to take a trade. So as the market was retracing lower with this candle, I took my first trade there. Then I had a second trade. I placed a limit below this low, below this slightly low inside this fair value gap. The market rallied higher, and the line I had placed over here, I wanted to take a partial, but I didn't take one because I wasn't watching the market, so I'll get rid of that. My first trade was tapped in, was in profit, then retraced, tapped into my second trade, rallied higher, and at around I cancelled my trade at around 11:45 because I didn't want to hold my trade to afternoon, because we had also had at around 14 this candle over here. We had FMC news, so I didn't want to trade the news, so I did cancel my trade over here. But what happened, the market rallied back to my entry place inside this, clear this liquidity inside this 15 minutes fair value gap over here. Then you can see how it started to be bullish. So that's what was my trade. I did cancel my trade out because of my trading plan, because by 11 I should be out of the market. So I did do that, and it was a good trade for me, nothing bad, because I didn't end up negative. I was positive. I took something small out, and I let something small also running. So something small, less than a lot, is running, and because yeah, I want to see if my TP will be hit with that. It will be okay, and hopefully that uh, my TP will be hit, and it will be a profitable trade for me at the end of the day. So this was my trade analysis. That's how I did trade my prices, and that's how I did trade my candles, everything. So I would like to request that you may like this video. Please subscribe, and let's get better all day, every day. So thank you for being around. Thank you for watching this video. Until next time, be safe,